From downtown Milwaukee, welcome to Money Talk with Bob Landis. Each week, professional advisors from Landis & Company Investments discuss the latest financial developments, offering timely insight and long-term perspective.
Welcome to Money Talk for May 17th, 2024. Checking the calendar, the Brewers are on a 9-game road trip that takes them to Houston, Miami, and Boston. And right here at home, we have the Milwaukee Ballet Saturday night at the Pabst and Moulin Rouge at Eline Hall. And for something a little different, the Urban Ecology Center has Kayaking the Rivers of Milwaukee. That would be a cool way to see the city. Spanning the globe, we're off to Milan, Italy, where they're banning ice cream and pizza sales after midnight. But you can still order vino as much as you like. What wine would you pair that with? Maybe cookie dough ice cream? Back in Florida, in an effort to recruit more police officers, Miami Beach has rolled out the first luxury squad car. It's a Rolls Royce. I can just hear the captain now. Go pick up those drunken spring breakers and don't let them puke in the car. Finally, do you remember as a little grade school kid taking the bus to Chicago, stopping at the Oasis, and then going to the Chicago Museum of Science and Industry? Well, you can't do that anymore, but only because they've changed the name. Ken Griffin, a Florida billionaire, dropped $125 million on the museum. So now it's called the Griffin Museum of Science and Industry. For $125 million, yeah, I changed my name. Heck, I do for $25 million. On the podcast today, we have Joel Dresa and Kendall Bauer, Tom Pappenfus, and wrapping up the week, the star of Kyle Fest in Kyle, Texas. This weekend, here's Kyle Tetting.
I will not be attending, much I'm sure to everyone's dismay, although I certainly have had a fair number of folks chime in that I should make sure I'm there. A good week overall for stocks, a good weekend for Kyle's. The NASDAQ up 2.1%, closing at the bell at 16,686. The S&P 500 up 1.5%, closing at 5303. The Dow Jones Industrial Average finally hit that 40,000 mark and stayed above it. Covered it Thursday and then gave a little back, but on Friday closing at 40,004, just above 40,000, up 1.2% for the week. After adding 135 points on the day for the year, the NASDAQ up 11.4%, the S&P up 11.7%, and the Dow up 6.8%. You know, Tom, I think the Dow 40,000, probably one of the headlines that's going to capture the weekend. But I think it's so interesting when you look at just how many things really are positive. And sometimes it seems to be some of the stuff that maybe isn't top of mind. We have all these conversations about, you know, we'll get into another conversation about maybe some of these meme stocks, but we have all these conversations about AI and about tech more broadly. And yet, you know, it's maybe not the thing that's leading the market entirely right now.
Yeah, it's really interesting. It's kind of the everything rally right now. You look at stocks, you got commodities, looking at copper, Bitcoin, safer investments like utilities. I think that's kind of really interesting. You know, that's typically a defensive, holding. People tend to own that for income because you don't expect much in the way of returns from utilities, but right now, they are the second leading performing sector in the S&P 500 this year. Last year they were down 7%. So it's really nice to see that something that you've held pretty much for more safety, less volatility, preservation is doing so well. Compared to the S&P, it's only averaged 6% a year. The S&P's been up about 15% a year on average over the last 5 years. And to your point, Kyle, I mean, you kind of look at, well, how does something like that happen? How do we see such robust performance in something more defensive like that? And really, you kind of look at some of these bigger secular trends that are happening. You alluded to artificial intelligence, and all the energy that is needed to create artificial intelligence. Right now, they are projecting, I think in the latest study, that the energy demands for some of that is going to grow at about 15% a year over the next 10 years on average. So obviously people are buying into utilities, and it's not just for income producing streams, but it's also now we can kind of consider for growth.
And I think the benefit long-term of utilities is that they are almost mandated moneymakers because they get to, with the help of government, set their own rates to make sure that they're cash flow positive, to make sure that they cover their costs. You're ultimately talking about a business that should be fairly stable. with a growth opportunity that we haven't seen in a while, and some of this build out and some of this potential for increased demand from their services. And so, to your point, the reason you hold utilities, it's a pretty steady income stream. It's a pretty consistent hold when you worry about volatility, and then you add in some of that upside. I think it's an interesting place to park some money. Of course, the challenge now is, after the run they've seen, are you still getting the value that utilities normally offer? And I think it's yet to be seen how much value is left on that corner of the world.
Well, at least at this point, right now, the latest valuation on it is, the S&P is about 20 times earnings, and utilities are about 17. So, I mean, there's still a relative value there. So that, the belief is that, with the expected growth plus, still seeing some value, there potentially is some more juice to squeeze.
And Kendall, you add in all of the mania around some of the other stuff that's out there. I think you can flip to the complete other side of the market, from tried and true defensible businesses with pretty concrete earnings models, and go to some of what grabbed a lot of the attention this week in some of these meme stocks again. It almost feels like, we go a couple of months where it disappears and then comes back in full force, and we definitely saw it this week.
Yeah, I think two things. One, it's been, I think, about 2 or 3 years since we've seen it to this degree, but it's came back this week with some of the familiar names that we saw in 2021, GameStop, AMC. A couple of things about it. I think good reminder to clients and especially younger investors that when these things happen, it can be tempting to jump in and try to ride the wave, but it really can, put you in a pretty tough spot. I think it can create a terrible first impression for younger investors and a bad experience. Piling money into some of these, meme stocks that are trading purely on, speculation, or other, folks on the internet driving up these prices to short them or to dump them. And, it can kind of scar folks that maybe are just beginning their investment journey. So just a good reminder to sometimes it's better to let the noise and the craziness, pass by, and remember that, hey, if you're in it for the long term, slow and steady wins the race.
Well, ultimately, we care about fundamentals, right? We care about, do these companies have strong and stable earnings? It's why utility stocks can be attractive, especially in markets where you're nervous. But when you even look at maybe some of the consumer defensive businesses, Walmart reported earnings this week, beat expectations, adjusted forward guidance higher, with this idea that, if we are in an environment in which things are slowing down still, we'll talk a little bit about that in a second, but if we're in that environment in which, things are still cooling, well, who stands to benefit from that? Consumers are still going to spend money. They just might spend it in places where they feel like they're getting a little bit of a better bargain. And so I think when you look at, all right, do I want to buy one of those random stocks that everybody's talking about because I feel like I'm missing out? Or do I want to buy the thing that fundamentally has some value, that long-term is going to be a driver of strong returns for my portfolio? I think I'd rather have 100 of those businesses than one that's going to be up 50% one day and down 50% the next, because at the end of the day, you're not making progress long-term. You're just getting whipsawed by all that volatility. Joel, it's pretty easy this week to look at maybe a small number of economic data points as the driver of a lot of the pretty strong returns. The biggest one that caught our attention was the release of the consumer price index level midweek, and signs that while we're not making the progress we hoped as quickly as we hoped, disinflation is still the kind of word of the day.
Yeah, Kyle, you're talking slow and steady. That's kind of what's going on with the economy, where I've got, I think I counted 11 indicators that I followed office-wide this week, and kind of just before I came in here, I looked at them and I wrote weak by 9 of them. So there are indications of weakness in all of those. And the big one, as you said, was the consumer price index, which is the broadest measure of inflation. And that showed for the first time in 3 months that we are making progress. The country's making progress on keeping the rate of inflation slower. So, again, back in mid 2022, the rates were, 40-year highs, and now they're back down again. They're still above the 2% that the Fed is looking at as a target long term. But for the month of April, we were 3.4% year to year on the consumer price index, and that's a long way off from what would it get to be like 9% back in mid 2022, and we're making those gains.
Yeah, and I think that is the key. It's never going to be as fast as we hope. You don't make it back to 2 instantly, especially after running as low as we ran for as long as we did, and the disruptions we saw from COVID, from all of the kind of hangover from that. But, when you consider how high it was, to your point, I think we've made decent progress and more to come. And then we got numbers on retail sales the next day, and, maybe signs that we are seeing that slowing the Fed is hoping for. But it is not everywhere. It's coming from, maybe half the areas measured in that number, and in other things we look at, it's a similar story.
Right, yeah. Again, the Fed raised interest rates back in 2022 to try to slow down the inflation, and by doing that, slowing the economy. And one sign of that is the retail sales, because consumers make up 2/3 of the economic drive in our country. And so when the retail sales are weak, that shows that, there's some steam coming out of that. And in the month of April, we made no change. We were even with the month of March as far as retail sales. And as you said, we have 13 major categories, retail categories that we look at, and 6 were down. 6 were up and 7 were down. So and among the 6 that were up was gas prices, gasoline stations, and that's because prices are up, because those numbers aren't adjusted for inflation. If you adjust for inflation, retail sales actually looked a little stronger. They were positive for the first time in a couple of months. It was the second time in 6 months that they were up. But so again, it's still weak and slow and steady as far as the progress on slowing down the economy to slow down inflation.
I think it's just another sign that mixed news on the economy is strong news overall for markets, as long as inflation continues to come under control. The Fed certainly has room to move when they're ready to do that. And they've been clear that they're going to wait for the right opportunity. But, I think as you look at the economic data, that's encouraging. And then one that I think I have a conversation on 5-10 times a week is housing. And we had housing starts and building permits this week. Housing starts at an encouraging number overall. But, plenty of room there, too, to make up some of the demand that maybe hasn't been filled.
And month to month, those are very volatile numbers. If you look at a graphic, if you type in Fred and say housing starts, it'll show you the numbers from the Federal Reserve Bank from St. Louis. They track a lot of this stuff, and you'll see it, and it goes up very much month to month. So that's one where month to month it doesn't pay a lot to look at. But for instance, the building permits, which is sort of a future indicator of housing starts, that went down in April while housing starts went up a little. And that negative number for building permits fed into the leading economic indicators number, which came out today, and that was one of the things that brought that indicator down, suggesting that we've got a weak economy.
We don't plug a lot of websites on this show, but the Federal Reserve Bank of St. Louis, if you're looking for data, they've got anything you could ever want just about. And
geek out on that economic stuff.
You got it. Joel, we spent some time this afternoon out at the Brookfield Convention Center celebrating the Waukesha Women and Girls Fund and their Women of Distinction. It's an organization that we've supported for a number of years. Why don't you tell us a little bit more about what they do, who they are, and maybe just a touch on why it's so important to us as an organization.
Yeah, it's very encouraging. We at this banquet they celebrated 4 women who got awards, and they talked about the amount of money that they're putting into the economy in Waukesha County through nonprofit outfits that are actually helping women and girls, and they've been doing this for quite a while. And the money initially came from when they the YWCA in Waukesha was about to dissolve, and there was money raised and an endowment created, and then eventually they discontinued the YWCA in Waukesha, but they had all that money, and they set that money aside for this fund, which helps raise women and girls in the community. And it's very remarkable, the progress that they're making through all of the nonprofit organizations that they're helping and what they do for women and girls in Waukesha County.
And I think it's just a good reminder of all the organizations that are out there that warrant our support. You know, we do a number of conversations on these podcasts every year about how to support. But I do like to highlight every once in a while some of the organizations that we support. My favorite part of Waukesha Women and Girls is that, you know, while they're a charitable organization, what they're really doing is helping to push resources to those other organizations that are doing all the good work. And so while it's a bit of an extra step, it's a step that helps to make sure that the organizations that need it get it, and that the work that is so desperately needed in our communities is being done. And so can't tell them enough how much we appreciate the work they do. It was an honor to be out there this afternoon just cheering on those 4 award winners, those 4 honorees. And again, I think a good reminder as you're talking to your neighbors, you're talking to your friends about what's so important in your lives, sometimes it's important to share those organizations you care about. With that, we enjoyed doing the program for you. If you're going to Kyle Fest this weekend in Texas, safe travels.
Use his name. Yeah.
Please send my best. And we look forward to talking to you again next week.
Thank you for listening to Money Talk with Bob Landis. If you have a financial question you want answered on next week's show, email it to moneytalk@landis.com. To keep informed throughout the week, visit our Money Talk page at landis.com.